Welcome to another episode of Agent versus Lender. And today we have Tyler Eaton with us, and he is the Vice President of Market Retail. I probably said that wrong. Did I say that right? Okay. Vice President of Market Retail for Cardinal Financial. So if you're a realtor and you're on this podcast, don't jump off right now because it's another lender. We want to talk about lending and what the process has done to the lending, what COVID has done to the lending process. So it's going to be very helpful to you to know what that is looking like right now, because it's going to help you. It's going to help your clients for you to understand that. So anyway, so we'll get right in. So Tyler, thanks for joining me today.
Thanks for having me, Ron. I appreciate it.
Awesome. So let's talk about the markets and what has COVID done to lending, man. It's what I can see it on my end. It's been a little rough. So
it's been rough for everybody. It's when COVID hit at the first of the year, Fannie and Freddie and Ginnie were struggling to update their guidelines to be able to make the accommodations to make sure that it was good lending and a borrower could pay that loan back and they were in good standing. So the first quarter was really quite rough, and into the second quarter, what's impacted most is self-employed borrowers. For the first time in this industry that I can remember, is we always went off the prior year tax returns to verify a self-employed borrower, and then we just verified they were still in business. Well, this year I have to get income for the current year, but I don't have tax returns. And that's been a frustration for loan officers and for realtors, because you have a good borrower who's self-employed, and all of a sudden we're making them jump through all these hoops. So those are some of the things that have been difficult to deal with. Also, income requirements. If you switched a job and you're starting a new job now, there's a whole set of requirements to verify that still is a good job, that you're going to stay in that job, that the current company you work for, COVID isn't going to cause that business to go out of business, and now you just lost your job, which you started for 60 days. So these are the challenges that the industry has struggled with. I think Fannie, Freddie, and Ginnie, the three agencies, have pretty much stabilized this last quarter. I think we know how we're going to have to move into the new year, but I think it's going to be this way for a good into the third quarter for 2021.
Yeah, I noticed as COVID hit and they started coming in with overlays that just really changed how we processed, and all of us had to change with that. We as loan officers, underwriting, processors, realtors, borrowers, it's been really challenging. But I'm starting to see that pendulum start to swing the other way slightly. It kind of reminds me back in 2007 when we had that crash, and the pendulum just swung so far one way. They just started, everything went away, and I'm starting to see some of those programs come back. So that pendulum's coming back, and I'm seeing that happen with COVID a little bit as they're lightening up on some of those guidelines. But still, it's not like 2005 where if you could fog a mirror, you could get a loan. It's definitely not those days.
And I don't think we'll ever see those days again.
I don't think we will either.
But they were fun times.
Yeah, they were. They were. So, okay, so the lending process has definitely changed. It's changed our timelines pre-COVID. In my branch, we were closing loans, and I think our average time frame was 19 days. We were getting some done as quickly as 7 to 10. It's just not happening right now for a multitude of reasons, and one is appraisers. Appraisers seem to be taking much longer to get done. Any thoughts on why that's happening? Or
I think they're overwhelmed. It's like the loan officer who was doing a couple loans a month, and all of a sudden he's doing 10 to 12 because of the low rates. I think the same thing has happened with the appraiser. Maybe they're doing 20 appraisers in a month, and now they're doing 50. And I think they're struggling to manage their time and get to it in a timely manner. I think the appraisers have adjusted to that, and I think that will probably get a little bit better. But I don't think we'll see the day or two turnarounds that we were seeing pre-COVID. It might still be a good 3 to 5 days before you get an appraisal out. I know in some parts of the country it's 10 to 20 days to get an appraisal. And in some cases, if you're in rural, it's over 30.
Yeah, we have one. I was just talking to Tyler just before the podcast, and we were talking about appraisals. And I have one where up in a rural area in a different state than Utah, and they want to push us out 60 days, and so we're struggling to find another appraiser that can do it a little quicker. But so there are some appraisal issues, and it's really wreaked havoc with our timelines.
It makes it difficult, but I think 2020 is going to stabilize a little bit. I think we'll see some improvement there.
Good.
Yeah.
Be nice to see something. So, I know that Cardinal. In full disclosure, I work for Cardinal as well, and Tyler. I've known Tyler for years and years, so he's actually a pretty good friend. After all these things, we go way back, and so Cardinal has a system called Octane, and so tell us a little bit about why Octane does so much to help us keep time frames down. Because it really does. It's really helped us manage our time and get our loans done a little faster. So tell us a little bit about that.
There's a lot of things that Octane does, but for the sake of this podcast, we're just going to focus on 3 things I think will interest your listeners. First of all, Octane was designed about 10 years ago, and the main reason it was designed is because the owner of the company realized with the CFPB coming with the new guidelines that one of the ways that we could remain profitable and competitive in the industry was to be able to streamline that process of doing loans through technology, because we know what the guidelines are. So he created a program called Octane, and it basically is artificial intelligence. And so if I'm a loan officer and I'm working with a realtor and you give me a purchase, and I'm going to pre-qualify that borrower for you, as I put that file into Octane and start the application and pull a credit report and look at the income, Octane will begin to underwrite that file for me because it knows the guidelines. So if I'm going to do a conventional purchase, 5% down, I pull the credit, look at the income, I put the file together, it's going to give me all the conditions that I need on that. So my team can begin to work on that before it even goes into underwriting. So we can address any issues. Obviously, we still need an underwriter to look at the documents to make sure they're proper. But that really cuts probably 5 to 7 days out of the typical lending process. The other thing that Octane does great that helps streamline is the system is automatic in many of the compliance issues. For example, I have to disclose a file within 3 days when I take that application. If there's a change in circumstance in the underwriter, or if I change the lock, I have to disclose again. And if I miss that, I can lose up to 3 days in lending. I'm sure everybody listening to this podcast has experienced that before, where someone forgot to do a compliance and you lost 3 to 4 days. Well, if I forget to do that as a loan officer, Octane in the middle of the night will run through its process and realize there's been a change of circumstance, this needs to get disclosed, and it will disclose in the middle of the night. So that way you never lose that 3 days or 4 days for someone missed that compliance.
I've loved that, actually. So when the system automatically does stuff, it's just like you're taking that human error factor out. And as good as my team is, and we usually do a very good job at keeping up on those things, there are some times when that automatic thing kicks in, and the next day we get these notifications that, hey, this has been sent out, and then we're calling the borrower to say, hey, this is what you have. So it's really nice to have that fail-proof, that fail-safe system in place. It's really helped us.
That's been a huge advantage for a lot of our loan officers using that system. It's given us a really unique competitive advantage in the market. So, and then the third thing I wanted to touch on today is just the communication with the borrower. So Octane automatically creates a dashboard for every borrower. And that borrower can sign into that dashboard anytime they want, and they can see what conditions need to be cleared, what documents they need to send to us. The LO can get on with the phone call with the borrower. They pull up their dashboard. They go through everything. It tells them their lock date, the rate. Everything is on that dashboard. The great thing about that, too, is if the borrower wants, they can share that with their real estate agent. So the real estate agent can be involved with that process with their borrower.
So I've loved that dashboard because it just makes us very transparent to the borrower. So the borrower basically logs on and they can see everything. Well, not everything, but pretty close everything that we can see.
Everything that's relevant for them.
Sure. So they can see the conditions. They can see what the lock date is. So it's not like, say, you can call up your loan officer and say, "Hey, did you lock?" Oh yeah, I locked yesterday. And they can log in the dashboard and go, "No, you didn't." They see it. So we have to, so it's really transparent. So they see exactly when things are happening and what conditions, like you said. And you said that they can give access to the borrower.
To the agent.
The borrower can give access to the agent. So that doesn't need to happen with our team. In our branch, we make phone calls at least weekly and sometimes more often, not only to the borrower to give updates, but also to the agent, both on the buyer's agent and the listing side, just because we feel like the listing agent seems to be left out of the process often. So we want everybody to be up on the file and know that things are moving forward. So it's been, but we've loved Octane and have that transparency with our borrowers.
Well, Ron, you're one of the unusual branches that makes those phone calls like that. I think a lot of people rely on the dashboard themselves. But yeah, those three things, I think if you're a real estate agent and you're looking for some ways you can be more competitive in the market and working with the LOs, those are some things that can give you some great tools to help in this competitive market that we're in right now.
Yeah. So we have a ambulance going right behind me, so yeah, I can hear that. So
Yes, we do.
if you heard that, there was a ambulance that was going right behind us, and don't know if that picked it up on the podcast. So Tyler, as a branch, what I like is that corporate has given us a lot of privileges. So we can adjust loans, we can adjust pricing, we can adjust all kinds of stuff. So tell us a little bit about what corporate has allowed us as a branch, so that we don't have to make phone calls to adjust loans and to compete. What have they given us?
Well, to go back to one of the advantages of Octane as a loan officer is it's all done within the system. So if you were to work here, the branch manager has a lot of leeway to set his pricing for his region or maybe his city that he works in. But from that point, he has the ability to do loan level pricing adjustments within Octane to accommodate a certain particular market or a niche he's going after. For example, if you were going to compete in the jumbo, which is highly competitive,
terribly competitive,
your branch manager can specifically set loan level price adjustments for jumbo loans that make you competitive. And it's done within Octane. So it's not like you have to call the lock desk, work with accounting, and then work with the compliance department to make all that happen. You can do it right there with Octane.
Yeah, so I've enjoyed that, because at other companies that I've worked at, whenever we had some really competitive bids that come in, it was almost, I'm not going to say impossible to compete, but it was very cumbersome, because we had to make so many phone calls, and it's all handled right here in the branch. So we can compete right here at the branch without making any calls or asking for permission.
Absolutely, and it's a huge competitive advantage for a loan officer, particularly when rates are so low. Sometimes we get in these bidding wars, and it really gives the loan officer an advantage to go out and be profitable, get good pay, and also win that deal.
Yeah. Well, that has given, I hope that's helped realtors understand that there's some differences. First, this lending in this environment has been a little challenging, not only for the realtor, but it's been challenging for us as loan officers, where we are right there with you, trying to make a difference, and the rules keep continually changing. We're having to keep up on guidelines, and so far we've been able to do that. But Octane makes it so much easier for us. Octane has been able to. So if I have some questions on, hey, can I even do this? I just put the scenario in Octane, and Octane tells me whether I can do it.
Yeah, that's the great thing of Octane. And what it really does is it helps cement that relationship between the agent and the loan officer. So you can build a long-term synergy by being able to be competitive, offer the products to your borrowers, and be able to get quick answers and make that turnaround go fast for them.
Yeah, that trust, you're a team, and having that trust is just really important.
When I started 20 years ago in this industry, like you did, Ron, it was like loan officers against agents.
I know.
I mean, that's how it felt 20 some odd years ago. And then when the CFPB came out in 2010 and we got the Dodd-Frank Act and we got all those different changes, all of a sudden it changed. It was like LOs and agents now have to work together. And so then we struggled to find people we like to work with. That was a big struggle. And now I think at this point, we really know who we like to work with. And now it's like, how do we make that relationship better? How do we improve it? And I think that's where Octane has been that missing piece to give that new advantage in these challenging times.
Yep. Well, appreciate that, Tyler. I don't know what else to say to realtors or to loan officers that happen to be listening to this. There's just the market's hard. We have low inventory. We're not going to go into that. I think everybody knows low inventory. We have changing guidelines that change weekly, sometimes daily. We have pricing loans that's interest rates that are all over the place. They're really low, and the next day they come up, and the next day they go back down, and so it's a really challenging time to be in the real estate.
It is, yes.
Yeah. So if you guys have any questions, I usually ask how to get hold of Tyler or how to get hold of my guests that are on here. I'm not going to ask them that because if you have questions for Tyler, just shoot them over to me and I can get them to him. So anyway, I appreciate you being here, Tyler. It's been really informative to help people understand that there's a way to make the process a little bit easier.
It's my pleasure, Ron. Thank you for having me.
Awesome. So if you ever need to get hold of me or my team, you can get hold of us at 801-628-7667. And we'll catch you again on another episode of Agent versus Lender.